Managing liquidity in a family office portfolio is a crucial skill that requires balancing immediate access to cash with long-term wealth preservation. For family offices, liquidity management isn't just about having cash readily available. It's about maintaining the ability to respond to market changes, capital needs, and investment opportunities, all while ensuring the wealth continues to grow. If you're managing a family office portfolio, chances are you've experienced the challenge of needing liquidity at the right time without compromising the long-term vision of the wealth you're protecting. So, how do you manage liquidity effectively without putting your wealth at risk? That's what we're diving into today. Before we jump in, if you're serious about protecting your wealth and securing your future, especially in today's uncertain market, click the first link in the description to access a free guide on why thousands of Americans are opening gold IRAs. This is a resource you'll want to explore if you're looking to safeguard your wealth, especially if you've got $100K or more in your IRA or 401K, or even if you're sitting on over $5 in savings. Now, back to liquidity management. The first thing to understand is that liquidity is not just about cash. It's about assets that are easy to convert into cash when you need it. A family office needs to balance its liquid assets like cash or marketable securities with illiquid investments like real estate or private equity. But too much liquidity can mean your money is just sitting there, not working as hard as it could be. Let's talk about a strategy many family offices use, a tiered liquidity approach. This means organizing your assets into different categories based on how easily you can access them. The first tier is your ultra-liquid assets, things like cash, money market funds, and publicly traded stocks. These assets can be accessed quickly and are ideal for short-term needs. Then, you've got your semi-liquid assets. This might be things like bonds or real estate that can be sold if needed, but may take a bit more time to liquidate. This tier helps you prepare for midterm needs or unforeseen expenses without having to touch your longer-term investments. Finally, your illiquid assets, which are typically longer-term investments like private equity or long-term real estate holdings. These require a more strategic approach because they take longer to liquidate, but they also offer the greatest potential for growth. This is where you can position a portion of your portfolio in a gold IRA to protect against market volatility while ensuring your wealth keeps growing over time. Let's dig into why a gold IRA is so critical here. Gold IRAs allow you to store physical gold in a tax-advantaged account. What's great about gold IRAs, especially for family offices, is that they act as a hedge against inflation and economic uncertainty. In times of market downturns, or when liquidity in other assets is hard to access, gold provides an excellent safeguard. Gold, unlike cash or stocks, tends to hold its value even when other assets falter, making it an ideal part of a diversified liquid portfolio. So, if you're looking to protect your wealth in the next 2 weeks, getting a gold IRA is something you need to seriously consider. It's not just a long-term strategy, but a short-term safeguard too. A well-diversified portfolio that includes gold IRAs can give you both liquidity and protection, two essential factors for a thriving family office. And let's not forget that your portfolio should always be actively monitored. Regularly assessing liquidity levels and adjusting your assets as needed can ensure that you're ready to weather any financial storms, whether it's a market downturn or a sudden need for cash. As we wrap up, here's the key takeaway. Managing liquidity in a family office portfolio isn't just about having cash in hand. It's about structuring your portfolio for flexibility, growth, and protection. And for high net worth individuals and American retirees, a gold IRA can be the critical component that adds that extra layer of security. If you're managing 100K or more in your IRA or 401K, or even if you have 5M pluckers in savings, click that link in the description to access your free gold IRA guide and see why so many people like you are turning to gold IRAs for peace of mind in uncertain times. Let me know your thoughts or questions in the comments. I'd love to hear about how you're managing your family office portfolio.